Hi folks, Mayur Joshi, Head of Research at MarketSmith India. Like we discussed last time, every Tuesday and Friday we come out with a report which shows 5 stocks which are appearing close to their pivot points as per the O'Neill methodology. And therefore I think as a discussion, as a learning curve, and as decided, we pick up one stock out of that report to probably just discuss on how O'Neill is looking at these growth stocks, actually building a momentum and reaching the key pivot levels. So without further ado, I think let's directly jump to that report and let me take you straight in terms of how that report looks. So if you go to our research tab in MarketSmith India, you'll obviously see the reports tab, under which we cover a lot of reports on a daily basis, weekly basis, and there are a lot of learning articles through each of these reports that we carry. As I said, every Tuesday and Thursday we carry these reports, and therefore this report is something that we have carried today. And the 5 stocks mentioned here with are something which seem to be very, very interesting as far as the O'Neill parameters are concerned. Now, one of the stocks which I would love to discuss is HEG. Now, fundamentally, I think what does this company do? It manufactures graphite electrodes, which is basically a consumable used in the electric arc furnace process for steel making. Why is it important? Because globally, we've probably seen that steel, which is made through green mechanisms, which emit 1/4 of the carbon like graphite electrodes do, or the electric arc furnace mechanism does, compared to the normal steel making process. The whole world is shifting towards that. Now, graphite electrodes become a very, very important component in terms of consumables for the electric arc furnaces, and therefore an important component in terms of steel making or green steel making as well. As far as numbers are concerned, which is obviously reflected through the EPS RS rating that we've probably got, more specifically through the EPS ratings, they have performed very well for the first half, but they had gone through a bad patch because China was probably struggling. But for the first half, the top line has grown both on a standalone and a consolidated basis for HEG at a very decent clip. When it comes to margin performance, it has been relatively better because the key raw material used in terms of making these electrodes is needle coke, which has largely remained benign and stable. As far as the bottom line growth is concerned, on the net profitability, both on standalone and a consolidated basis, for the entire year last year, it did close to 147 crores of PBT. They've already done 255 crores. In terms of profitability, it has already exceeded in the first half itself the entire profits that the company has done for the last financial year. Obviously, in terms of capacities, they have the largest electrode manufacturing capacities at 80,000 tons in Mandadeep, overall capacity of 1 lakh, and they're expanding that by 15,000 tons by the end of FY27. Therefore, I think with minimal debt on its books, the EPS rating should improve in our opinion going forward. And therefore, the purpose of making this video is from a learning curve on why certain stocks are making good basis, where expectations in terms of earnings trajectory going forward look reasonably placed, and the sector positioning, metals are doing fine, but as an alternate in terms of a proxy to the metals, this is one stock that you can obviously keep on your learning curve. As far as the technicals are concerned, the RS rating is very good at 84. The stock is actually making a cup with handle 1 week pattern. It has been here for 21 odd weeks. The pivot is close to 606 rupees. So it's very, very close to its pivot level. But even on previous occasions, if you probably look at the 1A pattern that it had formed with a pivot of 550, it stayed there for 31 weeks. Before that, it created a stage 1 pattern and it stayed there on a consolidation phase for 28 weeks at 548. So from that 550 band, it is clearly inching higher steadily. The volumes are showing a steady uptick as we speak. And therefore, I think the kind of parameters that O'Neill probably looks at in terms of earnings trajectory, in terms of RS ratings, in terms of return ratios, all look finely placed. The other stocks is also worth looking at in the report itself. And therefore, our sense is that the coverage that we are doing is something that will help you understand how O'Neill works. The purpose of making these videos is for learning purposes only. For many more learning articles, follow us at marketsmithindia.com.